welcome to Before You Build. We have David Coates here from Aussie Home Loan, and he will give us some insights on mortgage broking and how mortgage brokers help their clients get the best deal for their home loans. David,
Yes.
Thanks for having
Not a problem.
featuring on our video blog. Tell us about Aussie Home Loan and how long has it been in the business?
Yeah, so Aussie was started about 25 years ago by John Simons. He's still a big part of the business today. Currently, CBA owns about 80% of Aussie, so we are owned by the big banks, but that doesn't make us do more CBA business. So, and that's eventually going to sell. He'll sell the last 20% in the next couple of years, we think. So, they've been around 25 years. Started off with just John, and then now we're where we are now, doing the number one brokerage firm in Australia.
Oh, well, that's amazing. You mentioned that it is part of, owned by CBA. It doesn't stop you from going to different lenders, though, to get...
No, not at all. So we've got about 20 different lenders on our lending panel. So we can look at all your options for you, not just with the big banks, but we've also got the smaller banks and credit unions that we can go to as well.
Oh, that's really good. What are things that people should look for good mortgage brokers? Because I was speaking to you before about this. When I go to a mortgage broker, I'm worried that they have a really good deal with one specific bank, and then they steer the client to that specific bank, and they miss out on other banks that could give them a better interest rate. Yeah,
look, I think it's just a case of potentially meeting with a few different brokers and just getting a feel for what they're offering, and I guess, seeing that they are offering you multiple different options, or if they're not, as long as they've got a good reason for saying to go to lender XYZ, for these reasons, and that fits your needs and requirements, then I don't think that's necessarily a bad thing. It's just, you want to be able to go, okay, here's two or three different options. They're recommending option one because of, as I said, XYZ, that fits your needs and requirements, and if they can get you a better deal with that lender because they do have a better relationship, then great, why not take advantage of it?
Oh, okay, that's good. So when you see different lenders, we're going towards this, like the credit scoring.
Yes.
Will that affect their credit rating if they see different mortgage lenders or mortgage brokers?
It won't, as long as you're not doing multiple applications, then there's no credit inquiries, so it won't affect anything. So if you actually submit an application to a lender, they will do a credit check on you, which will then log as an inquiry on your credit file.
Okay, so with the credit rating, how important is that to get the mortgage approved?
Well, it's as long as you can explain the inquiries on your credit file. So, for example, if you did a loan application to ANZ or St George or someone like that, didn't proceed for whatever reason, and then you went to Westpac, and Westpac came back and said, what are these credit inquiries? As part of our job as the mortgage broker, we will actually cover that off in our notes that we submit with the application to say, application was done to lender ABC, not proceeded with, this application now is taking that place.
Okay.
So that's part of the initial conversation we will have with clients, which is to discover their history and their background and any if there are any bad credit scenarios, so that we can work around it and make sure we go to the right lender from the start, rather than doing applications to a lender who isn't going to accept it because of something that may be on their credit file. Okay,
so when they come and see you, for example, you start looking at their credit history first and explain to them, because most people that don't actually look at their credit history before approaching a mortgage broker.
Yeah, so we'll have that discussion about, is there anything have they had any late payments, defaults, anything like that in the past, and then go from there. If there's nothing there, great, it means we can go to any lender. If there are potentially any defaults or poor credit history, then we do have lenders that will look at clients in that scenario, and that doesn't mean you can't get a loan.
Okay, that's good.
Which is a really good thing. So we do have lenders that will look at that. You may pay a slightly higher interest rate for the short term, but then in a year or two's time, once we can refinance once things have come off the credit file and it's clear, and the major banks will look at it again.
Okay.